Today is Q&A Tuesday. Today's question is the 401k or the Roth 401k. Which one should I save into? But before we do that, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. So before we get into the points of which one you should choose, we need to know how they work. So the 401k versus the Roth 401k. So the traditional 401k goes in pre-tax, gross tax deferred, and comes out as ordinary income in retirement. Where the Roth 401k, which is just like a Roth IRA, goes in after tax, gross tax deferred, and then comes out tax-free. So the benefit of that Roth 401k is the growth portion is not taxed. Where in the traditional 401k, the growth is taxed because it hasn't been taxed previously. So that's kind of how they work between the two. Now, the limits with the traditional 401k is $19,000, and that's also true of the Roth 401k. It's also $19,000. And if you're 50 or older, it's an additional $6,000 for each. But there is an aggregate limit, and that aggregate limit is still $19,000 plus that $6,000 if you're 50 or older. So what does that mean? If you put in, say, $10,000 into your traditional 401k, then you would only be able to put an additional $9,000 into that Roth 401k. So the total limit is $19,000 or the additional $6,000 if you're 50 or older. So just like the traditional and the Roth IRAs, they have an aggregate limit of $6,000 for 2019. So it's $6,000 in total that you can choose to put in however you want to split that up. The same is true for the traditional 401k and the Roth 401k. Now, depending on your plan, the investments should be exactly the same in the 401k versus the Roth 401k. So you're going to have your investment selection in the traditional 401k, and it should be the same investment options as the Roth 401k. So the real question of which one you should save into doesn't really have to deal with the actual investments. It's just looking at it from a tax perspective. So that brings us to really the first point that you should look at when you're trying to make that decision between the traditional 401k and the Roth 401k. It's looking at your tax bracket. If you have the opportunity to get into a lower tax bracket, save a little bit on taxes, it might make more sense to put a little bit more money into the traditional 401k. But if that's not the case, then putting that excess amount into the Roth 401k might make more sense. Let me give you an illustration of how those two work. Now, I've used this before, and I compared the 401k to the Roth IRA. The math works exactly the same. In fact, I think this example is exactly the same as I did in the previous video. If you have your traditional 401k, a dollar goes into it pre-tax, so it's not going to be taxable just yet. Now, let's say that investment over time grows, it doubles to $2. When you pull that money out, it's going to be in, let's say we're assuming the 22% tax bracket, it's going to be $1.56, which is what comes out. On the flip side, the Roth 401k goes in after tax. So your $1 then has to be taxed, so you're left with 78 cents. If that doubles, it's $1.56, which is exactly the same as the traditional 401k. So if you're in the exact same tax bracket today and tomorrow, then from a tax perspective, it doesn't matter which one you put it into. It's going to be exactly the same, except the fact that you're lowering your taxable income today and you're lowering your taxable income tomorrow. So it's kind of smoothing your tax bracket out between the traditional 401k and the Roth 401k. So you're saving a little bit on taxes today and tomorrow and hopefully maximizing that. But there is a kicker. We don't know what taxes are going to be on down the road. So it's very important that we have both traditional 401k and Roth 401k dollars so we can have that taxable situation in our control. So if you fast forward into retirement and you have both the 401k and the Roth 401k, if taxes go up, then we can pull more money out of that Roth 401k. And if taxes go down, then we can pull more money out of that traditional IRA. But we don't know where taxes are going to be. And if you just looked at the recent 2017 Tax Cuts and Jobs Act, a lot has changed. Our standard deduction for an individual in 2019 is now $12,200. Or for married filing jointly, it's $24,400 and all the tax brackets changed. And who's to say that won't change again in years down the road when you're in retirement? So it really depends on what you think taxes will be in the future. But rather than making that bet, it's a good idea to have both. So looking back to today, if you're lowering your taxable income a little bit and then putting the rest into the Roth 401k, that will give you the ability to have both types of accounts. The other thing that you should take a look into today is looking at any other credits or deductions that you might qualify for. And these could be all over the board as far as your tax bracket goes. If you're in a lower tax bracket, you might qualify for the Savers credit, which has a lower income threshold. But on the flip side, if you're maxing out at $200 for an individual or $400 for married filing jointly, then you'd want to be careful that you wouldn't miss the child tax credit, which is a $2,000 tax credit. That's a huge tax savings per child that you would have if you're on the higher end of that spectrum. By putting money into the traditional 401k, you're reducing your tax bracket and then qualifying for both of those different types of tax credits or other deductions. So you really want to look at your overall situation to figure out which dollar would maximize your benefit today and tomorrow. The next point that you want to take a look at is looking at where your income is. And you don't really know where your income is going to be in the future, but if you feel like you're in a higher income year, then maybe you want to lean more towards the traditional 401k and save the Roth 401k for another year altogether. But let's say you're in a lower tax bracket or a lower taxable year this year, then maybe the Roth 401k would be more advantageous, because later on down the road, if your taxes increase or your income increases, you're going to pay more in taxes. And if you get access that Roth 401k, that will be tax-free, so it will put you in a lower tax bracket. So it really depends on where your income is. Now, if you have a steadier income, it might make sense to use both. So there really is no direct answer of which is better. It's what's better for your particular situation. And a lot of it is a guesstimate. We're really just guessing and estimating what our taxes are going to be, our income's going to be, and all these different variables that are really out of our control. The bottom line is this: no one really knows where our taxes are going to go, and you don't really know where your income is going to be in the future. But you can only do your best to project on where that's going to be. But the bottom line is you have to save. So if you're saving, you're headed in the right direction, and don't lose too much sleep over which one you should choose. Except if you want to look over the tax brackets, you want to look over the credits and deductions, that would be where I would start when you're deciding between the Roth 401k and the traditional 401k. But this isn't something that you can do at the end of the tax year. You have to do it proactively because you can't put the money into either account after December 31st of that tax year. Unlike the IRAs where you can do it up until tax filing, your tax filing deadline. So you really want to figure out where you're going to be, or do your best to project where you're going to be and look over some of the credits or the deductions today and get a head start on saving and maximizing your retirement. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.